So, have you looked at the housing market lately and just scratched your head? Yeah, you are not alone. It feels like a total minefield right now, full of contradictions that leave pretty much everyone feeling on edge. Today, we're going to try and make sense of it all, to untangle this great divide.
And that really is the big question, isn't it? The signals are all over the place, making it almost impossible to know what's really happening. Are we in a buyer's market, a seller's market, or is it something completely new? Well, let's get to the bottom of it. Okay, this right here, this is the core of the confusion. On one hand, you've got prices that are just stubbornly, frustratingly high, but on the other hand, the number of homes actually being sold has absolutely cratered. Now you'd think, okay, low sales must mean prices are about to tank, right? Well, that's not what's happening, and we're about to dig into why. All right, let's start with one half of this equation, the sellers. To really understand the market, we have to get inside the heads of current homeowners and figure out why so few of them are even willing to put a for sale sign on the lawn.
This quote from an economist at Realtor.com just nails the seller's mindset right now. They're basically digging in their heels and saying, look, I'm not lowering my price. And if I don't get the number I want, I'll just take my house off the market and wait. This refusal to budge is a huge, huge reason why inventory is so tight and prices are staying high.
So what's driving this? Why are they so stubborn? Well, it all comes down to something called the rate lock-in effect. Think about it. Millions and millions of homeowners are sitting on these incredible mortgage rates from a few years ago. We're talking 2, 3, maybe 4%. If they sell, they not only have to buy another expensive home, but their new mortgage would be at a much higher rate. It creates this massive financial reason to just not move. And if you want to see just how big of a deal this lock-in effect is, look at this. We aren't just talking about a little dip in sales. We're looking at the lowest number of existing home sales in nearly 3 decades, since 1995. That's how powerful this seller stalemate has become.
Okay, so we've got the seller side of the story. They're staying put. But what about the buyers? Well, it turns out even when they manage to find a home they like and get it under contract, they're starting to behave in a whole new, really surprising way.
Just look at this number, 13.7%. In just one recent month, that was the percentage of home deals that completely fell apart after going under contract. That's 40,000 deals that just vanished. Poof. And get this, it's the highest cancellation rate for a January since they even started tracking this stuff back in 2017. Buyers are getting cold feet like never before.
And just so you know, this isn't happening in just 1 or 2 random places. I mean, look at this data. In a city like San Antonio, more than 1 in every 5 deals was canceled. We're seeing this all over the country, from Texas to Georgia to California. Buyers are hitting the emergency brake right before the finish line.
So why? Why are so many people backing out? Well, it really boils down to 2 big things. First, buyers are realizing they actually have some power now. With less competition, they can push for repairs or, just walk away if a better house pops up. And second, there's just a lot of economic anxiety floating around. People are hearing about layoffs and are getting nervous, which makes taking on a massive new mortgage feel incredibly risky.
So let's put it all together, right? On one side, you've got these sellers, arms crossed with their amazing low rates, refusing to lower their prices. And on the other side, you have these cautious, nervous buyers who are also feeling newly empowered and are totally willing to walk away from a bad deal. What you get is a fascinating standoff.
And this whole situation has a really great name for it, the splintered market. It's not a boom, and it's not a crash, it is a stalemate. It's a classic tug of war. You have these determined sellers holding the line on price, while these careful buyers are refusing to overpay. The result is a market that's just kind of frozen in place. Which, of course, brings us to the $1 million or maybe $1 trillion question. In this high-stakes game of chicken between stubborn sellers and cautious buyers, something has to give, eventually. But who is going to blink first? That is the question that's going to define the housing market for a long time to come.